So how much capital do you need to trade the S&P 500 futures contract? So a common problem with new traders that I run into is that they are trading massive position sizes relative to their account balance. So let's run through a few facts on the S&P 500 and frame this properly so that you understand the requirements to trade an appropriate size. So how much capital do you need? So on the S&P 500 contract, the current pricing on that is $14,784 as of today. I just looked it up on the full ES contract, and the micro $1,478. Okay, so it's 1/10 the size. All right. So is that how much you need? No, not necessarily. So let's go through a little bit of data here. With that said, there are things out there called discount brokers. Different brokers have different requirements to trade. So the standard brokers like your TD Ameritrades, your E-Trades, your Schwab, those kinds of accounts, Fidelity, those guys are going to be looking at the full freight for those contracts. So if you're trading futures on those, in order to trade a single contract, that's what's required. So if you want to trade two contracts, you need double that, right? Okay. So this was done a while back, a few months back for that $11,800 pricing on there. But and you can see TradeStation is a discount broker. And the interactive brokers is a little bit less, and then you get into some discount brokers like NinjaTrader brokerage. You can get into like AMP futures. There's all kinds of different discount brokers out there that can provide you slimmer margins. Okay, so what does that mean? Well, that means you can trade per contract. You need $500 with NinjaTrader brokerage to be able to trade a single full-size contract. Okay, and on the micros, it's 1/10 the size, so $50 per single contract that you want to trade. Now that is a double-edged sword because these discount brokers that allows you to lever up with relatively little money. Okay, so what does that essentially mean? Let's run through an example. So start off by assessing your risk factor. Okay, start with your trading model. Are you a swing trader, day trader, a scalper, etc. Look at the average moves you're wanting to trade, and what does your trade model look like? Assess the risk on that trade model. Is it a 1-to-1 ratio, 2-to-1 ratio? Is that typically what you're looking for? So, for example, let's go to a chart here, and I'll show you what I mean. Okay, so here's your standard S&P. This is the current contract of the S&P 500. Let's say right here on this level right here, 51.23 and 3/4. This is the level that you've got on, and you're wanting to trade this level on the S&P 500. This is a full contract, right? So let's just go through and assess this. Let's say you're going to fade this level, and that's your trade model. That's what you want to do. Price comes down to here, and you're going to see price come to it, bounce off of it. You're going to trade that next bar open, right? So right at the open of the next bar, let's measure that off. And let's say you're willing to risk 12 ticks, okay? To make, let's go and double that up. Let's say you're going to risk 1 to make 2. All right, let's just do that for an example. All right, so now you've got a risk on at $50 per point, right? And you're risking 3 points. That's $150 to the downside. That's your risk. That's what you want to measure. Your reward to the upside is double that. If you're doing a 2-to-1 risk reward ratio or a 1-to-1, whatever the case is. But let's just, for this intents and purposes, we're going to stick with that 2-to-1. So you're risking $150 to make 300. Okay, so now let's do the reverse math on that and show you what that looks like in terms of your account balance needed to trade that trade model. Okay, so your risk per trade, like I said, 3 points, $150 at 50 points per point, or $50 per point on the S&P 500, and you're risking 3 of them on that trade model. Okay, your reward 6 points, $300 per contract. So that's per contract traded. And let's say you've assessed your risk tolerance and you're willing to risk 1% of your account balance per trade. Okay. That would require you to have a $15,000 account balance to start off with for that specific trade model. So that's how you kind of assess how much money you need to trade the S&P 500. And if you want to trade the micro then you just divide that by 10 because the micros are a tenth the size. But that's how you kind of assess how much money is required. Hope that was helpful. Thanks for watching.